Investors and traders, welcome to the channel Market Chart Pattern. Today we'll be taking a look at the Forex market. We'll be taking a look at the dollar index and the major Forex currency pairs. This video is for educational purposes only and it is not a financial advice. Okay, so we are taking a look at the daily chart of US dollar index futures. And here a few things to note. Number one is that the dollar index made a 50% retracement of its lows going back to January of 2021, so quite a while. In fact, I'm just going to blow it up here. What it did was on 2nd of February 2023, so a few weeks ago, it did a fake lower move only to reverse higher for the day, and since then we have seen strength in this market. Now what we are going to look at is the key pattern formation, which we have been watching for quite some time, and now is a really good time to dig further into it. Okay, so before we proceed, actually just to recall, overall at a macro level, we believe that the US dollar might have actually peaked around the 115 level. But it does not mean that the dollar index cannot have, or the US dollar cannot have rallies, in fact sharp rallies. We did a video, I'll put a link to that video, in which we had a look and why we think the US dollar might have peaked, and in that video we also take a look at the past behavior when the US dollar had peaked. And what we have seen in the past is after forming a top, the dollar index did have, or the US dollar did have, sharp rallies, and at times even tried to challenge the high in order to form an orthodox high, which might not necessarily mean that it took the previous high out, but it tried to make an attempt to take the high out, failed, and then that high becomes the orthodox high, because what it means is price tried to take the high out, there wasn't enough sufficient strength in it, and it just rolled over, and that is what I like to call the orthodox high. Okay, so what we are looking at is the US dollar index futures chart, and here the key pattern that we are watching for is that 382 retracement, so 38.2% retracement coming at around 106.07 level. Also what we have is this ABCD formation, which is going to take us somewhere, well, not somewhere to be precise, 105.55, which is not too far away from where we actually close. So in fact it is close enough, but in this region of 105.55 to 106.07 is the level that we are watching for a potential turn to happen in US dollar. And if this level gets exceeded, meaning there is more strength in the US dollar, then we will be looking for two consecutive daily closes above this, which will tell us that actually the dollar is much stronger, and we could have higher levels to watch for example the 61.8% Fibonacci retracement level. And in fact that will also give us some expansion levels to take a look at. Just quickly doing that with you here. So yeah, the expansion levels come around 106.86 till between 108, and we have the 50% in between. So as a first step, we will be just watching the 38.2% Fibonacci retracement. If this trend to the downside is strong enough, that is the level, the 38.2% Fibonacci retracement, where it should go into strong resistance. So let's take a look at the Euro USD. So Euro USD is the mirror image of dollar index pretty much. So the dollar index is about, I believe about 52% of dollar index is actually weighted in the euro. So that is why we see pretty much a mirror image of what happens in the US dollar, just on the opposite side. So if the dollar index is moving higher, the Euro USD is moving lower, and vice versa. So what we have seen since the late September of 2022, we have seen a strength come in the Euro USD pair, and the market has zigzagged and moved higher. So here what we have done is we have identified the 38.2% Fibonacci retracement level, which is the kind of the inverse of what we saw in the US dollar from the lows back on 28th of September 2022. And this is where we have this level coming around 104.60. So that could also mean that it'll form a double bottom here potentially. Okay, so one thing to note is that this will be the first 38.2% Fibonacci retracement if in fact price gets there off the lows of 28th of September 2022, which the lows were quite a while ago. So this is what we are watching in Euro USD. There's also an ABCD pattern formation here. So just quickly do that. So there we go. The ABCD pattern formation comes a little bit lower, around 104.30 level. So anywhere between 104.60 to 104.30, that's a 30 pip range. We could have strong support coming and price could get there. So this is what we are watching in Euro USD. So the next pair we are going to take a look at is the GBP USD, the British pound, or also known as cable in the trade. So here the cable has a very interesting pattern. As you know, this pair went through a good amount of a great deal of volatility back in late September of 2022. I'm not going to go into the details of that stuff. We just focus mainly on the pattern formations and technical aspects of the market. So one key thing to note about this market is that it has completed a big ABCD pattern, which is a one-to-one projection. I like to call it ABCD just because it's an easier reference. It could also be 1, 2, 3, 4, but we'll just go with ABCD for now. And what it means is that it has formed it completed that pattern, and the market just went sideways. And in fact, there was a retest of this level of around 124.50, one spot 24.50. The market was not able to take that level out. It just went in trading range, and then it just went lower. And in fact, what it did was it formed a double top. Now the key level which we are watching for is around this support zone highlighted in the blue shaded area. So to give you the precise numbers, it could be anywhere between one spot 1670 to one spot 1650. So 1.1650. That is the 38.2% Fibonacci retracement of this entire low formed back in late September 2022 to the highs of, and in fact the retest of this high of 23rd of Jan 2023. And it is also the 61.8% Fibonacci retracement of the lows formed in on the 4th of November. Now guys, the low formed on the 4th of November is really a key level, because that was the exact 38.2% Fibonacci retracement of the lows of late September 2022. And 38.2% retracement is important because in strong trending markets, this is where normally the support comes in. And if you look at, this is where we have drawn the ABCD formation as well, and which quite rightly picked the actual top in the market so far. Okay, so again, just to recap, just what we have looked at the dollar index, there is possible strength coming in the US dollar, which means that GBP USD could likely weaken from here. And the key level that we'll be watching for support on the downside is around 116.70 to 116.60, excuse me, to about 116.30. So this is what we are watching in GBP USD. Let's take a look at the US dollar and Japanese yen. All right, guys. So this is the chart of the US dollar to the Japanese yen. And here we have a very nice pattern formation. So just to go back a little bit, and quickly what we're going to take a look at is that this market actually formed a major low formation around the beginning of January of 2021. So it's been nearly about a little over 2 years. And what we have seen is in the recent few months, starting from the 21st of October 2022, the market has been retracing lower. So what the market has done is it has retraced about 50% of this entire move higher from October of 2022, excuse me, about 2021. So right here, this is the move which we have taken. That was the low which we used for our retracement. Another really important thing to take a note of is that this market actually, when it retraced this 50%, it also did that in an ABCD formation here. So we have two confluence of two things coming together, a 50% retracement plus a ABCD, which is a one-to-one move. That makes this low a pretty important low actually. However, what we also note is in this decline of ABCD formation, the retracements have been either 50% or they have been 38.2%. So this one was about a 50% retracement of this high. This one is the 38.2% retracement of this high. This one is the 50% of this high, and here actually the market tested this retracement a few times, was not able to take it out, and then it moved lower to complete that ABCD pattern formation. In between, there are a few other patterns which I have not discussed. There's like a 3 drive to a bottom pattern, which I've not discussed in this video, but it does exist. Okay, so what we are watching now is we are watching for the 38.2% Fibonacci retracement of this entire decline, which started back in on the Friday 21st of October 2022 last year. So what the price is also doing is it has actually moved in this ABCD or one-to-one formation here, but the price action actually exceeded that level, and it is challenging right here into the 38.2% retracement. Now, based on the patterns from kind of the market symmetry, what we have seen is the market decline from either 50% retracement or the 38.2% retracement. What we are watching for is actually a zone which is in fact a little bit wider zone. So what we are watching for is between 38.2% to 50% retracement. So anywhere between 136.50 to around 139.50 is what we are watching for, is the kind of the region where this market could find itself in strong resistance. However, if this zone is taken out, then in fact what it means is that this ABCD formation of the 50% on 16th of January 2023 is an important low, and perhaps this market has much more further to go onto the upside. So in fact what it will mean is more US dollar strength. So as we had done the analysis of dollar index, we know that we are expecting some strength to come in the US dollar index, but we are also watching for that 38.2% Fibonacci retracement. That is how all of these things are kind of meshing together. We'll take a quick look on the Australian dollar. It's going to be a really quick one for the Australian dollar. Okay, so for Australian dollar, what we are looking for is, let me just quickly do this here. What we have seen in the Aussie dollar is basically the market topping back in 25th of February 2021, so quite a while ago, and it had formed a key pattern formation right at the 61.8% Fibonacci retracement, along with an ABCD formation, which is the one-to-one projection, and the market moved lower from there quite significantly. And then what it did is market has done this one-to-one formation one more time, so ABCD, and it seems that it completed that ABCD pattern and then moved significantly higher right to the 61.8% Fibonacci retracement of that high, and here it seems to have formed a double top. So you can see top, top, and in fact there is like a micro double top here as well, and that has caused this market to move lower quite sharply. What we also note is that there is a ABCD formation right here where the market closed, and it is also very close to this 50% retracement coming quite closely. So perhaps it looks like maybe there is some further downside to some extent, so a little bit further downside, but because of this ABCD formation, we should be watching this level where the market closed pretty much very, very carefully for perhaps some consolidation to take place. To in fact, a reversal is also possible, so that's also a possibility. I'm not ruling out. Again, we'll have to wait and watch and see how the market is going to perform in terms of the price action. This is what we are looking at in forex market, the key currency pairs that we are tracking along with the US dollar index. If you like the way we look at the market and how we analyze the market using key pattern formation and Fibonacci retracements, then please do subscribe to the channel. Also hit that bell icon button, that way you will know when the new videos are posted. And also, if you found the material useful for yourself from an educational perspective, then please do like the video. That way I know that people find the material educational, useful for themselves, and it just encourages me to bring more videos out. So thank you very much. Do not forget to subscribe to the channel, and I wish you good luck and good trading.